What's up, Tycoon? Super excited for today's video. This is going to be a great one. Okay, so you're going to want to stick to the end because there's going to be a lot you're going to learn here, and you may even want to rewatch the videos a couple times because there's going to be a lot of valuable information. Okay, so with that being said, we'll go ahead and dive straight into it. But this was a viewer request. All right, so if you have any stock requests you want me to analyze or break down for you, kind of give you an idea on, let me know in the comments below, and I'll be happy to do that. Okay. We're going to look at the AMC weekly chart right now, and we're going to look at this right here, okay? This is the Wall Street cheat sheet, okay? Psychology of a market cycle. Now, if you notice, it starts off in disbelief, right? Then we would see hope, optimism, belief, thrill, euphoria. I'm a genius. We're all going to be rich. AMC, ape, hodl, ape, hodl. Yeah, we all know that. Then there was complacency, anxiety, denial, panic, capitulation, anger, depression, disbelief. Oh, look where they start charts, disbelief. Okay. So, it's just a cycle, guys. There's always going to be a euphoria cycle. There's always going to be anxiety, denial, panic, etc. Once you understand this and you're able to realize this, things will get a lot easier for you. Okay. This is one of my favorite charts to look at. Just, it really teaches you guys a lot. We've been living in a euphoria cycle, right? Going from disbelief and hope. This was our COVID crash. Okay. I mean, look at the S&P 500. This is pretty much looks just like it. Okay. We had hope, disbelief, and then it just went straight up after that. Okay. In a straight line for the past 2 years, 2020, 2021. That's what was going on. All right. We're in here. Okay. We saw complacency, anxiety, denial. And, we're right now in between like panic, capitulation, anger, and depression. We're somewhere in this phase. Okay. I'm not a market predictor. Okay. But, I just understand market cycles and I can look at it and see where we're at. Now let's look at it. Okay. We have our disbelief, our hope, optimism, relief, rally, thrill. Boom. We come up here, hit euphoria. Right. We come down and then we come down again and retest these levels. That's when we break. All right. That's, now we're in anxiety and, heading, and this could have been our capitulation phase, right? Or we could still be in capitulation, but we'll look at that chart one more time because that's what I want to show you guys. Okay. Complacency is right up here. Anxiety is when we break those lows. Denial, panic, capitulation is what follows after while it goes down in a straight line until it finds some support and, continues to go a little bit lower, but finds some support, trades a little bit more sideways, and we start to rally. All right. So, as you can see here, boom, we hit those lows, we rallied, we came up. This was our complacency. Okay. Then, we broke those lows right here. And now we're heading down and, we could be, heading towards capitulation phase. And, once we get through that, if we already didn't go through capitulation, but that's still to see, still to come. That's basically my opinion on it right now is that we are, we could be either somewhere between panic and where we, still have capitulation and we come down more, especially with this Russia flood. This is the perfect time. All right. I'm getting 100% out of the markets. I can't afford to lose more. Right. When you start hearing that, it's a great time to look at some blue chip stocks, in my opinion, and start looking at, dollar cost averaging and, or getting some positions and putting a stop loss on, and getting ready for some long-term investments. Okay. Because, then your disbelief rally starts and eventually the market will head back into euphoria and, you'll be up very, very nice on your positions. Okay. But yeah, so that's kind of my take on it for right now. All right. We could have bounced and, we could be trying to form that recovery. It's got earnings coming up. Earnings has been huge catalyst. Every single one of them in 2022 has been just absolutely ridiculous. Right. You never know whether they're going to go up or down. I mean, there's some ones you could have predicted. Right. But for the most part, that's it. Now, the next thing I'm going to show you guys on the right, this is what's known as the volume profile. What this means is that, this is where all the volume is trading relative to the chart. So this is volume to price. And these volumes are what's known as volume to time. Okay. So, at the time of this day, we can see what the volume was, but we can't see what the volume was at these prices. This over here, this volume profile study shows you the volume at the specific prices. All right. So we're going to use this to help create some support and resistance levels. And we're going to do that all right here live. All right. The only other thing on my chart is these three lines right here. These are some basic simple moving averages. We have the 50 SMA in yellow, the 100 SMA in red, and the 200 SMA there on top. Okay, as you can see, we're currently trading below all of those. We had a death cross on AMC on the daily chart, which is what's known as when the 50 SMA crosses the 200 SMA and we start trading below it. That's what's known as a death cross. And it's yeah, I mean, it's scary. Okay. Death cross is, it's scary in the name. All right. So that's basically the first things that I'm noticing. I'm looking at the chart, I'm looking at the naked chart, I'm looking at the volume profile. I'm seeing we already had a death cross and we've dropped lower ever since that. So the death cross has been an indicator of bearishness. So for us to, get out of this bearish cycle, we're going to have to start trading above all these moving averages and try to flip this 100 SMA above the 200 SMA and get the 50 SMA so we can have what's known as a golden cross, right? Which is a very bullish thing. And that's when the 50 SMA crosses the 200 SMA on the upside and we start trading at a higher level, right? But we need to figure out where it's going to find some support at, right? So let's look at the volume profile. And we want to look for where these are the most extended to the right, right? So over here, we have one right here at this price level. And I'm just going to put one, right here at the top. And we're going to go here and we're going to hit extend to the left or, click on the left extension. And now we can see, wow, oh my gosh, we're looking at it and all we did was look at the volume and we were able to tell, oh, look, this is a freaking super valid support level just right there. Just where the peak of volume is at this price level is a super valid support level. On the daily chart here, it's tested at 1, 2, 3, 4, 5, 6, 7, 8 times, 9 times right there. We go back to the past, right? And this was a resistance level that we were testing multiple times. 1, 2, 3, 4, 5, 6, 7, 8 times we faced that as a resistance level. Right. So it's a pretty key level. Now, what happened last time we tested it about 8 times there, as I showed you, we broke it. All right. Now we've tested it about like 8 or 9 times again, but now as a support. So what does that mean? Well, in my opinion, what that means is that, all of this volume right here from these buyers at that level that we were looking at, are those people going to step back in? Okay, that's basically what I'm trying to say. All right. It's all about supply and demand. That's what drives the market. That's the main market thing. Is there going to be enough demand at this price level the next time we fall to it, right, for it to recover? Because we fell to it so many times here recently and it's keep recovering. All right. So the first time those buyers are stepping in, second time those buyers are stepping in. The buyers have stepped in about 8 times. And as a result, the price is now trading higher. So we need to continue heading higher because if we keep testing these levels, the more you test the level, the weaker it gets, right? The reason that it gets weaker is because those buyers are now absent from the market, right? They don't have unlimited funds as much as we all like to think that these institutions and hedge funds do, right? We like to think, oh, well, hey, 15 is the great value. There's no reason it should go below 15. So, I'm just super bullish right there. And I'll be, and I don't have to worry about it going any lower. I don't have to save any more money. I don't have to use risk management and set a stop loss, get out at 14 because maybe it's heading down to 12 and I can get in at 12, right? There's multiple strategies you can use. But this is, kind of my opinion on it, right? So this is going to be our first major support level right here, 1450. All right. And then now let's go ahead and use that volume profile indicator again. And let's draw one at the bottom of this level. So I'll put one right here and then we'll go ahead and extend this to the left. All right. And I'm going to go down to the next largest one. Okay. Which is going to be right here on the volume profile. And we're going to extend this to the left. And let's go ahead and zoom in on those. And just based alone off the volume profile, these 3 lines, all right, that I just put on the chart are going to be the strongest, these are the strongest support levels that you're going to see in AMC below, $30, right? There may be some, higher ones over there at a higher price, but, at the levels that we're at and below, these three levels right here is the, where you're going to see the most action and the most possibility of buyers stepping in. If there's no buyers to step in at these prices, what's going to happen is the price is going to fall quickly. Okay. And you know how I know it's going to fall quickly? Because there's no volume of buyers stepping in, right? So here's what happens here. If we look on the volume profile here and then zoom in on the chart a little bit, around this level. All right. What we'll see, sorry, I did that. What we'll see, okay, is that, it's basically kind of like a support level, support and resistance level. And then when we drop off and it starts going down, if you look at the volume profile, it just dips. Okay. So the volume profile dips and there's no volume on it. Right. And then, um, you know, so that's basically it. All right. Is, look at the volume on this and, keep track of that. These three levels right here, if you're bullish on AMC, this is it for you. All right. If we don't have buyers at these levels, what's going to happen is we're going to drop and it's going to drop down hard. Until the volume comes back up. Okay. And that's essentially what's going to keep happening with AMC. That's the reason that we fell from $30 down to $15 really quickly is, because there was, a large amount of volume at the $30 price. It's tested it a few times, 1, 2, 3, 4. This is a time when a lot of buyers were stepping in. There was a lot of buying volume at these prices. Then we broke those prices. We broke those price levels and there was no volume of buyers stepping in here, right? It's just sellers. And it's just, volume. If you look on the chart right here, volume is pretty low. It's not as massive as these green days, right? Or perhaps this red day. But volume is pretty low. And that's just because there's no buyers stepping in, from at $30 down to $15, there was nobody coming in and buying AMC. But now it hit $15. It found a good support level. This is where we're going to see some people buying it. And so those are going to be the three main levels. That's it. Like if AMC falls further and you're bullish on AMC and you think that this can go to whatever price, right? Because I mean, none of this is financial advice. I don't trade AMC. The reason being is because the brokers can just stop your account, all right, and just take your money and just try to give you a discount on fees. All right. This happened to one of the admin traders, and a lot of people got burned in the initial first short squeeze of AMC, and it wasn't on Robinhood. It was on platforms like Thinkorswim. It was on platforms like Fidelity, right? People were up 50,000%, all of this crazy stuff, and you couldn't sell. They like, it was just crazy, dude. It was such a crazy time. And it was for a lot of other stocks. And I know Robinhood gets all the blame and all the hate for it. And yeah, like, I'm big on the F Robinhood train, but other brokerages did the same exact thing. Okay. Thinkorswim did the same exact thing. So, this short squeeze that we're all waiting for and that people all want, and they want to see AMC go to the moon. Like, what's the chances actually that they're actually going to let you sell when you want to sell? That's my take on it. That's my take on AMC. Appreciate you guys watching. I'm going to try to start using this a little bit more in my videos and just kind of showing you guys so you can see it a little bit better. And I think it's really helpful. So, I know I messed around a little bit and was jumbling my words a bunch. I'm trying to get used to making videos with, using this volume profile indicator and just kind of using SMAs. Let me know if you like this type of strategy better than maybe some of my supply and demand videos, or maybe some of those support and resistance videos. If you guys just want to see some key levels about the SMAs, and if there's anything significant going on there, and you want to take a look at the volume profile, see the major levels, right, where there's potential activity for high volume. If you don't see that high volume, then you're going to see a dramatic change in the price. And if you do see that high volume, then you would see a dramatic change in the price as well. All right. So don't forget to join the Discord. Use code Zachly. All right. The link to join is in the description below. And if you use code Zachly, you'll get a discount on your membership. All right. So thanks again for watching. I'm out.